Gold and real estate have been the two most reliable investments. Landlords were always the elites of the society, and owning a piece of real estate was like a dream for most people. Even today, prices have risen so much that owning a home seems unreal. However, in the last few centuries, the financial system has developed so much that it presents an alternative way to grow wealth. Warren Buffett is a living proof of that with smart long-term investments in the stock market, you can do pretty good. Here in this video, we will explore which one is a better investment. Is real estate still a great investment as it was in the past? Or the stock market is a better alternative in the 21st century? There is a lot of debate around it. Real estate investors claim that real estate is the best investment ever, but stock market guys claim the opposite. But both of them are right to a certain degree. The truth is somewhere in the middle. But to find out what exactly, we have to take a look, an in-depth look into each of them. Let's start with the fact that real estate is expensive. No matter where you are, people often work an entire lifetime just to own one property. That was the case with your parents probably. To make a single real estate investment, you need a lot of savings. On the other hand, you can start investing in the stock market with as little as $5. Of course, it depends on the stock, but most companies, even great companies such as Apple, are traded at around $300 per share. You can become an investor in one of the largest companies in the world with just a few $100. But the cost doesn't stop there. It's no longer like the old days where you have to pay a broker. With apps like Robinhood, you can purchase a stock for absolutely free. But when it comes to real estate, the transaction fee is quite expensive. That doesn't necessarily mean that the stock market is better. Risks that come with the stock market are much higher. It's difficult to analyze the market and individual stocks in particular. We might be at the peak of expansion period where the entire market is overvalued, and your investment will probably fall by 20, 30 or even 40% if you do not cash out right before the market crashes. If anything, history taught us that nothing is too big to fail. For instance, Apple is a huge company, so was Nokia once upon a time. In fact, Apple was already once on the brink of bankruptcy. Stock prices change every single day for different reasons. That can trigger an emotional response and push you to exit the market at a loss, which is what happens quite often, even with professional investors. But with real estate, it isn't like that. As long as it's in the city, the land beneath it will always be valuable. And even during crises, they often restore their value pretty quickly, since everyone needs a roof over their heads. Real estate covers one of our most important needs. When you buy a property, you can sleep well and be confident that you're not going to wake up the next morning with the news that your property lost half of its value. What also makes real estate attractive is that it provides passive income. With rent prices going up, you don't even need to work. It's one of the few investments that can provide you with a strong, stable income that has a dividend yield of 7, 8 or even 10%. Whereas it's extremely rare for any company to pay a dividend yield of 5% or more. Some companies pay, of course, but they are risky stocks where you might lose much more by the drop of the price than you can possibly make out of dividends. But it also works the other way around. Real estate does not appreciate as much as the stock market. In 2019, on average, home prices appreciated by 3.8%, while the S&P 500 was up to by 28%, which is almost 10 times. In the past decade, Amazon had a total rate return of 1200%, or Netflix had 3 times that number at 3700%. You will never find such returns in the real estate world because in the stock market, companies constantly innovate to stay ahead of everyone else. In 25 years, Amazon grew from nothing to over $1 trillion company. However, the business world is ruthless. Today you are at the top, tomorrow your competitor will take you down. It isn't like real estate that sits in the corner and keep getting your monthly passive income. When it comes to taxes, there are two approaches. The stock price can go to 1000%, but you're only getting wealthier on paper. If you want to materialize that wealth, you need to sell that stock, where you have to pay a capital gain tax, which is 20% for long-term investments and can go as high as 37% for short-term trades. With real estate, there are multiple ways to avoid taxes and use that cash to grow your wealth. For instance, instead of paying for the entire property upfront, you can deduct the portion of your mortgage attributable to interest payments on your tax returns. You can recover the cost of income producing rental property through depreciation. Depreciation expenses often result in a net loss on investment property, even if the property actually produces positive cash flow. This loss, as well as expenses such as utilities and insurance, deducted from ordinary income. Even if you end up selling the house, you can avoid paying capital gain tax if you purchase another property. Tax benefits are quite decent in real estate. But of course, it's not all sunshine and rainbows. Unlike stocks, where you can read the financial statements of the company, do some research about the company and decide whether it's worth your money or not, real estate requires much more work. To find one proper rental property, you might need weeks if not months. That's just part of it. Once you start renting it out, you will come across whole different types of challenges, such as finding decent tenants who can keep paying the rent and would take care of the house. The house constantly needs some maintenance. Something always breaks down and needs to be replaced. All that is going to accrue additional costs and expenses. That also means it might be difficult for you to move to a different city or a country because your property might need you there all the time. However, investing in the stock market doesn't have all those headaches. You can be wherever you want. You can simply follow the news and the performance of your portfolio from the comfort of your smartphone. What I like about the stock market is that it can teach you more about the business world than your 4-year bachelor degree would ever do. Every time you analyze a company before throwing your green dollars into it, you have to read its financial statements, understand its cash flow, study its past to have a better clarity about its future decisions, get to know better its products and their sales. On top of that, you have to understand deeply how the economic machine works, the role of banks in the economic cycle, and so on. So if you ever want to start a business, that knowledge will be the backbone of your startup. But the stock market isn't just about buying and selling stocks. The financial system is so complex that there are many more ways to make money in the stock market than most people know, such as shorting, where you sell a stock when it's high and buy it back when it's low. Sounds complicated? Well, I have explained that in one of the previous videos, so check it out. And then you have futures, options. You can earn money by predicting the future price of the crude oil. We can't discuss all of that in this video, but you get the picture. If you master the stock market, the doors of opportunities will be opened in front of you. Even if you don't have the time to do all of that, you can keep your savings in an index fund and be confident that in the long run you can expect a 10% return. When you buy a stock, it's just a digital document on the screen of your smartphone. You almost have no control over it, since your single stock isn't going to give you much influence over the company when the company has another 5 billion stocks. Whereas real estate gives you complete control over your investment. You can touch it, feel it, and control it. Besides the passive income it can provide, as we have discussed earlier, you can use leverage. Let's say you have $25,000. Putting $25,000 into securities buys $25,000 in value. Conversely, the same investment in real estate could buy $125,000 in property with a mortgage and tax-deductible interest. So, where should you invest? The answer is, it depends. If you're keen on passive income, then real estate is your choice. However, if you want to aim for higher returns, the stock market is undoubtedly a better option, especially if you're an amateur investor with little money to start. But you should also take into account what you find interesting. If you find it too boring analyzing companies and going through endless paperwork, then maybe it's just not for you. Factors such as the place you live also plays a role. Maybe in your city or even a country things are different, so you have to draw your own conclusion based on your circumstances. That's it for this video. If you want to support our channel, make sure you check out our Patreon page. Other than that, just give this video a thumbs up and subscribe if you're new around here. Thanks for watching, and until next time.